Hello everyone, welcome to Smart Investing. I'm Albert, the host of the channel. And today this video is going to be a quick stock update. Every time I say quick, I always take more than like 15-20 minutes. But I'm definitely going to make this one really quick. This is going to be a stock update basically for the quarter of April, May, and June. These sectors that I think that they're gonna be pretty popular in the next 3 months. They have been popular the past month, so I think it's gonna continue. The momentum is gonna continue into these sectors. So the reason I'm saying that is because the way Wall Street works is that they like to move money around. It's nothing new. They'll take their money into certain sectors. It could be at any given time. It could be for certain reasons. It could be because of certain seasons and time frames, because that's the way they like to have their approach. And they also have their favorite stocks. So they're basically moving money around to one sector to another. So with the given news with the war and everything that's going on, inflation's hitting, a 40-year high. And I think inflation, it started off at around 7%. I can't recall the exact numbers, somewhere around 7. It's already reached close to 9, maybe surpassing 9% already. And what I'm talking about is just normal everyday usage, such as food and gas prices. So again, consumers such as myself and everybody else, we're the ones who end up paying for high prices. But the good thing is that if you're an investor, if you're a smart investor, then you can tolerate the pain, as I like to say, and you can withstand the headwinds, as they say. So let's begin. Let's just start off with the 10, actually 11 stocks. I thought I had 10, but it's 11 stocks. So basically, first quarter is over. Obviously, the last 3 months have been on a downtrend. So these next 3 months, they're really gonna kick into overdrive. So like I said, food prices and gas prices. So to me, that's like common sense. So I'm going with the flow, as I like to say. So I'm gonna be looking at like not exactly food stocks. I don't have them on my list. And the reason being, it is a good sector. The reason being is because those stock prices are very high. So it's hard to find stocks that are pretty cheap, that revolve around that sector. So when I look at it, they're over $100 a share for like any given food stock. So I do realize that other people just can't afford it. A lot of Americans are just broke, so it just hits their pockets pretty hard. Even myself included. I mean, a little bit, but I know people have it worse than me. So I truly understand, and I try to look out for those people as well. And if you do have money to burn, I have like long-term portfolios for that. I don't throw them out too much, but I have them in my previous videos. I think I probably do at least one a year, and I do try to update it when I get a chance. So let's start off with the first stock. The first stock actually I have was EOG. So EOG, I wouldn't say I recommended it, but I gotta stop saying like I'm recommending, because I just don't want to get in trouble. I mean, I'm always so passionate and excited about giving stocks, but I have to be more disciplined in my videos when I say stuff, because I don't want people to lose money, because again, I'm not licensed or insured. So offering the disclaimer, Since I'm not licensed or insured, you know, you have to please consult a professional advisor, somebody who is licensed and insured, uh, someone who, you know, who's willing to actually recommend and give you the prices and when to buy and when to sell. Fortunately, I can't do that. I wish I could, but I can't. So again, the stock market carries great risk and reward. So seek somebody who is licensed and insured. So, anyways, moving on. What I can say is that so the sectors for oil and gas related stocks. This stock here, I mentioned it before, EOG. I like it. I can't say anything more than that. I have to start talking in terms of my personal portfolio and actually use this as information, just passing off information. I'd say, I have to say it's an opinion, even though I know it's true. Again, because liability reasons. So I hope you guys understand that. So I just have to say that I like this stock. It's really good for a watch list. So I know it's pretty expensive at $122.94 right now. And today is actually, sorry, I didn't mention the date. Today is Saturday, April 5th, 16th, 9:30 p.m. on the Eastern time zone. So again, I'm in Florida on the East Coast. So again, EOG is the ticker symbol, as you can see here. And the reason I like it, it's a gross company, and also they pay dividends. They're really, really good dividends. But this is for somebody who can afford it. I know the yields are low, but this is a company that can survive a bear market just because of the financial data that I have gone over. And as you can see here, PE ratio is pretty fair. So from the info that I see, it's at a fair value. You're getting a total payout of $3 per year. Not a lot of stocks pay that, especially in the oil industry. And if they do, yes, they have a high dividend yield, but the total amount is not going to be that much. As you can see, they're earning pretty good. The stock price, that's for the 5 year. Let's go to the 1 year. As you can see, they paid out 6 times in this past year. I was going to say 2021, but it included actually around here since January all the way till now. So this is not 1 year result. It's the year to date. So basically the last 12 months. And we're going to look at the last 3 months. As you can see, it has grown 16%. So we see that here. It has grown around 16.4%. And I could see this stock growing even more. So let me just show you guys real quick the reason why I like this company. Again, I think I've said it before, the dividends. As you can see here, we have a nice payout since 2021. These are I'm going to highlight the 2021 results. As you can see here, they have paid special dividends once and twice. So that is basically a bonus on top of the regular dividends. So when we look at the regular dividends, you can see here in 2021, we can see here that they have increased the dividend. So from 37 cents, it has grown to 41. No, they did not increase it each payout, but each year is good enough. So we went from 37 cents in 2021. So they paid 41 cents, 41 cents, and then 41 cents. And then if you see here, that was the end of 2021. Now coming into 2022, they paid a total of 75 cents. So we have a difference from 2021, 41 cents, and a difference in 2022. So the difference between that and that is about, let's do the math. So we're looking at about 34 cents, and every penny counts. So that is a big difference. We look at the splits. That's not a lot of splits ever since they have been a public company. I've seen way more splits. And the amount for the splits, you have a 2-for-1, so that is not bad. But we look at the last time they have done a split in 2014. So the time difference between that doesn't look pretty active. So that's a good thing. That's like almost a 10-year gap. So that's pretty good. You don't really want to see nothing every 10 years. So that's so far so good. So we have that, and then we're going to look at a deep dive into the yearly estimates and results for the 2021 financial data. So real quick, we have high revenue. Revenue has grown. So we can see here bar charts. Blue is revenue. Purple is the net income. Year to year, I mean, you see the revenue kind of drop down a little bit. And then the net income kind of dropped. But then here, from 2020 to 2021, it has gone up. It's gone up. So that is a good sign. So we're going to take a deep dive here and click on the financial data. As you can see, their earnings have grown. So that is a good sign. And when we have earnings growing, usually that means sales are growing. So if they can boost earnings and revenue, that's usually a good sign, along with low debt. Those are the three main, I wouldn't say indicators, but those are the three main financial data points that you actually want to see. If you really want to be strict on your stock picking, I wouldn't say stock picking, because it depends on if you want to do it overall by sector or by market cap or whatever. But if you're doing an evaluation and really want to be strict, depending on what's going on at the time, then so be it. But I would say, to be on the safe side, you would want to be strict. And what I mean by that is that they have to be growing like all their data points for their indicators, the key indicators for financial data, such as all this. You want to see this grow, this grow, this grow, their margins grow, this low, cash flow grow as well. So it's like they have to pass everything, like a whole checklist. So anyways, we can see here it's gone down from 2020 to 2021. It has shot up by a huge margin, as you can see here, by close to 22%. That is a huge gain compared to last year. 2021 has grown tremendously. So you look at the past 5 years, definitely. So then we look at also net margins have grown tremendously compared to 2020. Obviously 2020 was a bad year, but over the past 5 years, 2021 seemed like the best year. Their debt is fairly low. I mean, 42%. And it stayed the same close to the past 5 years. So that's pretty good. So I wanted to show you guys that. And again, I think it's a good stock. I like it. I think it's a good watch list for the stock. And again, you don't really have... It's very, very, very hard to find stocks that actually pay dividends. One, raising dividends, and bonus dividends. So with that special dividend, it'll help. I mean, it's not guaranteed, but once they start that process And as you can see here, I've said it before. Some companies they might not say special dividend in 1 year, and sometimes they say it and sometimes they don't. But as you can see here, they did pay a huge amount of $1, so I just consider that as a special dividend. But if you own the stock, it'll tell you in actuality, by statement and by payment, if it is an actual special dividend or dividend. So basically, if it's a bonus or just a regular dividend. So moving on to the next stock. I'm sorry I took too long with that, but I thought it was just a really good stock for growth and dividends. Growth and income. So you have a good mix of both qualities. So next one up, everything else is pretty much a growth play, or stuff that I have my eye on. So I have my eye on this one as a short-term play at HNRG. This is more of like swing trading. The reason I like it, it's relatively cheap. Volume has gone up. The sector is very, very popular right now. That is a must right now. Coal is very, very popular as of right now. So as we can see here, they're pretty cheap compared to their peers. If you want a pricier coal stock, then the highest price one is ARCH. I haven't looked at that. Too expensive for me. I'd rather look at something else. Again, this is a short-term play. Really, I'm just looking at the next 3 months, like I said, for the quarter. So it's not something that I think about keeping for more than a year. If it does do good even past the 3 months, again, might do a reevaluation, see if it's good. Because stocks go up and down, week to week, day to day, and month to month. But again, with this situation with the war and stuff like that, I think the next 3 months, food and gas prices are definitely gonna hit hard the next few months. I cannot give a price tag for when to buy and when to sell. Again, the price is pretty high. If it were me, I will wait for a little drop at least. Even if it's like close to $1, something. Just wait for a little drop. It would be nice to jump in. And again, I want to wait and see if it can beat the 52-week high first. As soon as it can beat, even if it goes 8 cents up tomorrow, as soon as it passes that, then it'll be a nice time to jump in. As long as it's breaking new highs, because the stock is so cheap. So again, this is a short-term play. Not again up to 3 months. Nothing crazy. And what I mean by that is this is not something that I'll buy like 100 shares worth of. Something maybe 10 shares or something like that. That's what I would do. I'm not recommending it. That's just my opinion as to my situation and my circumstances. So this is a stock that I think is pretty decent, and I think it's gonna do pretty good the next 2.5 months, because we're already halfway done with April. Next one up I have is TMST. Let me say this right. Timkensteel Exploration. Corporation. So I like the chart for the last 3 months. So we're gonna look at the year. It's jumped up a lot. It had a pullback, as you can see right here on the chart. If it were me, again, I'll wait for another pullback. I do want to see if it has reached the 52-week high. It's close to it. Again, once it reaches the 52-week high, I don't want to buy at the top. I kind of want to wait for the pullback, and then hopefully it can reach new highs. So, yeah, just, I guess as they say, buy a small dip. I don't see it that way. It's just, because a dip, when people say buy the dip, it's usually a long roller coaster ride down, and then you kind of want to. People say it's like, timing the market, but you can only do the best that you can do. So again, A nice pullback would be nice, and then hopefully it can reach the 52-week highs. Again, they have positive earnings. The reason I like them, they are undervalued, as you can see. And again, the price tag is not too expensive compared to their peers. As we can see here, looking at the company, I don't recall if they pay a dividend. Well, they did, but that's not too much of a concern for me. The sector is definitely important. Iron and steel is pretty hot right now. That's what Wall Street likes. So I'm going to go with the flow with Wall Street. But again, when it comes to the price tag, I have to take sides with Main Street, with retail investors, because Wall Street likes the expensive, luxurious stocks, in which I don't mind one or two, but that's not a complete portfolio that I would look into. They just, Wall Street just likes everything expensive usually. I mean, they don't, occasionally they do cheap stocks, but I just invest in stocks, plain and simple, period. I look at as many stocks as I can. So this is what I have been doing for the past 2 years. So as we can see, ever since March for this year, it has shot up right there. Took a little pullback, shot up, took a little pullback. This would have been a nice time to actually jump in right around here, but hopefully it pulls back again. So we're looking at this little difference here. So if it dropped that much, so we're looking at about a $2 difference. So hopefully it can drop down $1 or $2. Again, this is not something I will buy 100 shares worth of. Something just very, very small investment. Even one share, whatever you guys can afford. But I like it. I mean, I think it's a nice stock. And I don't look at analyst ratings anymore. I just don't trust analysts. Even though it says, based on 2 analysts. It's basically, I wouldn't say manipulation, but it's just them choosing if they like it or not. And it's almost like, oh, I have to base my decision because an analyst said this and that. So I just don't agree with it. I think over the years I've kind of been more, how can I say, just kind of leading my own path, if you want to call it that. I just don't, less and less. I've just been following what I have done for my research, and I've just been following less of what other people say and try to establish a track record and a truth method as to why I like the stock and why I don't. Other people, they just kind of want to just hype up a stock, or they don't really give you the insight, a full analysis. So this is why I differentiate my channel from other people. So next one up, Caledonia Mining. This is a gold stock play, short-term play. Ticker symbol, as you can see, is CMCL. And we can see the chart has grown tremendously. So we're looking at around, let's say, March 1st, around here. So it went up, went flat, then went up again. I haven't really seen big dips, so for the chart, it's gonna be really hard. It's gonna be hard. I mean, first of all, the stock is cheap. So even if you miss a dip, you still get a dividend, and the stock is still pretty good and cheap. Again, positive earnings. Slightly undervalued, so it looks like a fair price from what I'm seeing. And hold on, let me just look at the 52-week high. So 52-week high of 1729. Let me look at the chart one more time. Let me look at the longer term. So we have a 1 year, and then let me look at a 5 year. I have to look at a 5 year because 2020 and 2021 have been ridiculously overpriced stocks these past few years. So I just want to see more or less what is a target point. So around there, that's too damn high. So it broke out of like around 18 bucks, jumped up here, and then went back down. So I could see it going up again. Maybe a few dollars, getting in and out of profit. Kind of itching a little bit. I apologize. So this will be a nice play for the next few months if it were me. Again, I'm not recommending this stock, but it's a nice watch list. They do pay dividends, CMCL, if you're interested in getting a gold play. I have a few more gold plays that I'm going to discuss also. I think I have 4 more gold stocks on here, miners, that are still pretty good. So you can choose out of the 5. So they do pay dividends up to 14 cents. So we have a split. Oh, I do not like that. They had a split. 20 for 1 and 1 for 100 in 2017. It doesn't look too bad, though. It still doesn't look too bad, even though they did have 2 splits. What is their net income? So they dropped slightly right here. It's okay. Yeah, very low debt. That I like. That is a check. That I do like. So again, this stock is okay. It's okay. I think it's okay. Again, I'm not recommending it. You could watch list it. If it goes down for a little dip, then just wait for the market to go down a little bit. If not, there's other stocks to choose from. So the next one up that I have is AUY. This is another gold stock. As you can see here, this one dipped as well, shot up. You see here, it hasn't really broken the highs, 52-week highs, probably by a few cents, as you can see here, only by like 7 cents about. And then they do have positive earnings. They do pay a dividend yield. So let's look at the max. Let's see if we have that. So max, they have gone up to, let's say, double the price minimum. So let's look at the 1 year. So they have been growing like crazy. So it wouldn't hurt to tiptoe right about now. Volume is high as well. So these are gold play stocks. So we have dividends that they pay out quarterly of 3 cents. And again, those are that's the second gold stock. This stock I really like. This is a definite watch list. I know it's pricey, but they do pay rising dividends. I've had this on my watch list for a long time. I really do like this company. Definitely a long-term buy and hold. If it were me. I know they're pricey again, but total dividend is about 2. It's showing me that they're undervalued, so they have a long way to go to get to the price where they want to be at. So ever since February, you're seeing they're close to even doubling their price in about 2 months. So if it hits 180 by the end of April, they doubled their price in just 2 months. So let's look at the deep dive real quick. So we have 2021. So we have strong earnings. They're basically the number 1 company on their list when it comes to iron and steel. for earnings. So as you can see here, increase of 10 cents, and this was in 2021. So as we can see here, dividend increase in 2018. Let's start with 2018. So this was about a 2 cents difference right here. And then we have, yeah, let's look at the split. So not bad. But yeah, Nucor, they're still a pretty good company. I know they're pretty pricey right now, but hopefully one of these companies dip, and then that's the only thing I can say. Hopefully one of these companies dip and you can jump in a little bit and use a short-term play. So we have a 52-week high of 163, so it looks like they beat the highs. And let me just look at the chart one more time. Let's look at the chart one more time. So yeah, I'll wait till it jumps back down. I know it's kind of crazy. Like, it's only been like 2 months, and to say, wow, damn, I kind of missed out. But it's fine. It's always fine to look at other stocks, and you know, it's about patience as well. You don't want to buy at the top and then wind up selling. So next up, one up that I have is Sand. This one I do like. As we can see, it's starting to break out past the 52-week high again. Pretty cheap stock. They just started to pay dividends. This is another gold stock. The reason I like this stock, definitely because of their business model. They do have royalties, so basically they own gold mines, and they kind of rent out the gold mines for other people to search for gold. So basically they just rent out their mines to other people, and they just collect royalties. They are a Canadian company. I think I've had them before in my long-term portfolio. It wouldn't hurt to add them in again. I can't give a price, but as you can see, like I'm going over with you guys, I do like that it's going back to even the 5-year chart. We're looking at the 5-year chart here. As you can see, they're trying to break the price from 2021 and from 2020. So even though you might be buying at a slight high, I definitely watch list this one. And again, the price is not even that much. So this will make a nice, good watch list. Again, they started paying a dividend, but again, a nice little dip, and then it'll be nice to jump back in when the chance is available. Net income has grown, revenue has grown, as you can see here. Revenue, net income has kind of juggled up and down a little bit. That's pretty normal for stocks, but as long as they remain about the same and definitely positive. So we have here very low debt, very, very low debt. And as I was saying, their business model is really, really good. I think they're one of the best. They're just very, very underrated. As you can see here, they're Canadian company, I believe, originally, but they do have operations in the US. As we can see here, they focused on streaming and royalty. So again, like I said, they own those mines and they own everything. They just lease it out to other mining companies, so they can try to find gold themselves. Other companies try to establish, you know, a foundation to make money on gold that they're trying to find. So as you can see here, they have a portfolio of 229 royalties. So definitely no debt, and they just keep collecting that royalty. And again, the dividend is not much, but they do pay a dividend. They just started in 2022. They paid 2 cents Canadian in January and 2 cents in April. So they have had a split in 2008. It's been a little while, over 10 years, so that's pretty much a long time. So they do have positive earnings, as you can see, and their volume has increased as well. So it's getting pretty active for this stock. We just want to see more activity. So next one up that I have is, let's move on to the next one, BTG. So BTG, another gold stock. Funny thing is, very funny thing is, the people that like Bitcoin, this stock has been around before Bitcoin, yet they have the same logo. So the funny thing is, if people start to discover that this company was actually the pioneer to have this logo, and Bitcoin was the copycat to have that logo, people will say, wait, whoa, is this the same company? I wonder if other people think that. That's what I'm thinking, but who knows? I mean, this is definitely a watch list stock, definitely a bonus stock. So as we can see here, this is definitely the same logo as Bitcoin. Again, the stock symbol for this one is BTG B2Gold. So we have here a share price of $4.97, close to $5. Earnings are positive. PE looks good. Everything looks good. Let's do a deeper dive on the chart real quick. Let's look at the 5-year. So the 5-year will have to break highs of about 525. So that, I mean, it looks far away on the chart, but when you look at it by price, that's only like about a quarter away. So this stock definitely will make a nice watch list right now if you want to decide to add gold to the portfolio. Again, don't go crazy buying like 500 shares. Don't do nothing crazy. You know, at your own risk and your own pace, as I can say. I definitely am. Again, a nice watch list for a gold company if you have thought about adding any gold stocks. Let's do a deeper dive into the financials. So we have revenue. Net income has dropped a little bit. I know I'm going too fast, but you know, you can always rewind this or slow it down or speed it up on the YouTube channel. So I just want to hurry up with my time. So we have here debt 16% going to 17, and they're still just doing pretty good. The dividend is at around 4 cents, so it's not much, but it's something. So the next one up that I have is Rio, and we're almost done. So we have Rio at 81.87. This is a diversified mining company, so they are at 12, close to 13 earnings per share. Looking pretty active. From what I'm seeing, it looks fairly cheap, and the dividend yield is at 9.69. I don't know if that's accurate or not. I could be wrong. So we have here, looking at the chart, at the 5-year hasn't broke the 5-year. Would have been nice to get a nice little dip again, but if one of those stocks dip, that's the watch list play. You know, add some of these to the watch list. Whoever drops down, if they drop down, then you know it'll be a nice time for me to get in. So let's look at the 1 month. The chart has grown from, in 1 month, from about, let's say, $69 all the way to 81 right now. So that's at least $20. Sorry, that's at least $10. Yeah, at least $10 in 1 month. So that's pretty good. And we have here, they are $100 billion market cap company. So you know these are the big leagues. This company is definitely in the big leagues with 100 billion market cap. So yeah, we have here dividends, as you can see. So they paid a dividend of 417, 376. So yeah, this company does pay pretty strong dividends, and as you can see, they pay special dividends. This is definitely a company for the long term, especially if you're getting dividends and special dividends. I do want to say though, a lot of people don't know this or realize this. I'm not sure, but I want to make sure if it is for this year. If you do collect special dividends, I think depending on your income, you might have to pay taxes. Don't quote me on that, but take it as a safe side to do so. I think you do have to pay taxes if you receive your bonus dividend. Again, I think if I forgot the income levels, but if you're not making, basically if you're not making six figures or less, then you have nothing to worry about. If you're making like over six figures, yeah, you're gonna be paying like a crap load of taxes. And this is me guesstimating. I say about 20% in taxes if you're making like over 100K. Again, don't quote me on that. I can come up with actual numbers, but again, that's just a guesstimate. So yeah, they do pay special dividends. I just wanted to state that. So again, this is one of the best companies out right now. If you had to choose just one company that had to be for mining, and again, aside from the gold, if you had to just choose one mining company in total, aside from the gold and copper or steel and iron, I think this one is the best bet. I think this one is really, really good for short term and long term. So, yeah, definitely a really nice company to have on the watch list. Last one up. Oh, sorry, two more. So I have Southern Copper, ticker symbol SCCO. We have at $4 dividend payout for the year. It's slightly overvalued from what I'm seeing. I'll wait for a little drop if it were me. 52-week high and low. So yeah, I'll wait for a little drop. Seems pretty active, so that's pretty good. Definitely strong earnings, as you can see. Dividend yield is not too bad. Again, that's not the first thing I look at. I saved that for last, but the payout is definitely worth it. Let's look at the chart for the 5-year. It dipped down a little bit, so it'll be nice to have a little dip. And it's going back up. So last 3 months has gone up. As you can see here, it's starting to dip, which is a good sign. So then hopefully it'll go back up. But yeah, you want to catch those little dips, even if it's like $2-3 worth. That's really the name of the game. When it starts getting active. Do they pay dividends? Let's see. They do pay dividends. So obviously you saw the total payout and then you saw the yield. But the question is, do they pay rising dividends? Let's look at 2020. Let's separate that. Let's look at 2019. So from 2019 to 2020, we have the same amount. It looks like they cut it here in 2020 because that was the pandemic. I understand a cut, but it was only a one-time cut, so that wasn't bad. So now they started to pay again in 2020 the 40 cents. Last payment in 2020 was 50 cents. So from here on, this was a raise. This was pretty much a 10-cent raise. So from here to here, 10 cents. And mind you, this is the start of 2021. This was 20 cents. Another 10 cents. Another 10 cents. So you really have really nice raises in here. Really nice raises. You really don't see dividend cuts. So definitely a good stock for the long term. Definitely to add to the watch list. I think this one is up there right with with RIO. $56 billion market cap. Sort of pricey. I mean, it's debatable. It's hard to say what's pricey and what's not. I think anything between above 50 is a little pricey. Anything below 50, it's affordable. That's my opinion. But to each their own. I don't want to debate that. That's just my opinion. But again, the share price right now is at $72.79. So, last one up that I have is gold. This was a Warren Buffett play a few years back. I think it was either in 2020 or 2021. It's been that long. I don't really pay attention to really big names like Warren Buffett like that, especially the older guys. I mean, I pay attention to Elon Musk, the younger guys, because they're more active, but all the older guys that are like retired and stuff, I don't pay attention to old and retired guys like that. I think their best days are behind them, to be honest. Yeah, they are good investors, but yeah, it's time for new and improved investors to start taking over the throne and doing better and pass the torch to younger, more passionate investors. So we have here a 52-week low and 52-week high of 17 and 26. Looks like we're buying at the high. If it makes a nice watch list. Again, I wait for a little dip. Hopefully these are one of the stocks that dip, and it would be nice to get in. I know they don't pay a nice dividend. Again, overall, this is a short-term play, and it's okay. I mean, this is an okay stock. The only reason I think people might like it is because Warren Buffett was involved with this stock. Again, like I said, he purchased some shares like last year or the year before. And yeah, they pay rising dividends, but only like a penny or two, as you can see here. There, they paid a 1 cent raise here. So I don't like the stock. Warren Buffett does, or maybe he did like it. I don't know if he's still heavily owning shares in this stock, but it is what it is. So yeah, let me cut it short and let me end it. I know I had a lot of stocks, but that's the end of it. Gold was the last stock that I have. So that's all I have for you guys. I'm gonna continue the banking sector like right now, right after this video. So again, thank you for paying attention to the deep dive. I know this was long, but I hope you guys enjoyed the video, learned something. You can like the channel, subscribe, or comment. Any of those will be fine. I know my videos are long, but they're informative. Again, you can always fast forward the video to not hear my mouth and just listen to more important facts that I have to say, and I won't take up too much of your time. So again, you can put it on a speed of 1.5 in the settings for your YouTube channel, and it will be much faster and improved for the quality of this video. So thank you guys for watching, and I'll see you guys soon in the next one.